Morning, everybody. Happy Monday. I hope you guys all had an awesome weekend, awesome Super Bowl weekend. If you're a Tampa Bay or a Tom Brady fan, it was a good weekend for you. If you're a Kansas City hater, it was a good day for you. As a Bronco fan, we are trained to hate the Raiders and the Chiefs, so I was not rooting for them. Plus, I am a Tom Brady fan. I appreciate him and his awesomeness. Excuse me, I have some allergies going on this morning. Ugh, it's gross. But happy Monday. As always, I give everyone a few minutes to jump in here and join us. As you do, please go ahead and say hey. Let me know you're here, where you're joining from. Let me know how your weekend was, if you did anything exciting or different or new. We watched the Super Bowl yesterday by ourselves and I worked. But my family, like my kids, my husband, me, and my parents went to an Airbnb for the weekend, just to kind of get away and rejuvenate. Just in the middle of, good morning, Veronica. How's the weather down there? Right now it's beautiful today. It's supposed to be like 50 here. It's been, for the last few days, it's been like deceivingly chilly here in Colorado. Outside it's gorgeous, like the sun is shining, it looks bright, and you walk outside, it's 30 degrees. And you're like, ooh, that was a little chilly. But today it's going to be about 50. So my husband's out playing pickleball, and hopefully I'll go for a walk here at some point. Oh, it's rainy there. Yeah, so it's supposed to be okay all week. So here, it did snow or like frost a little bit last night because I went to let the dogs out this morning, and it was a little, not coming down, but it was, the grass is like covered in snow. Anyway, guys, as you join, please go ahead and start posting your questions. I have a few that I want to answer that I've gotten over the last couple days. But if you are here, it's because you want to ask some questions. So please go ahead and start putting them in the chat, because I would much rather address the questions that y'all have that are here live than the stockpile ones that I have. Not that I don't love answering those, but I kind of feel if you guys are showing up, I want to answer your questions if you have them. So I'm going to open a few things. I forgot to open things. Sorry, guys. Jeez, that's annoying. Okay. Where's my Facebook? Here. Like, why can't I find things? I just have to search for it. Do you guys do that? Like, you think you know where things are, and you're like, oh, and then you're like, it's not where I thought it was. So you have to use the search function. I do that on my phone too, because I have my apps like in folder, like I have my entertainment folder and my, work folder. And so I'll try to put things in there, but then I can't find something. So I have to use the search anyway. So I'm like, defeats the purpose. So this last week, you guys, so it is February 7th. Nope, it's February 8th. Yesterday was February 7th. And we are we're right in the heart of tax season. The first week in February is when it really starts, because people have their W-2s, their 1099s. We're actually getting some work done. So it's, what is it? Ish is about to hit the fan. So, all right, Veronica. So it says, I recently started my LLC S Corp and haven't made any money yet. Do I still file taxes? What a great question. So when you say I recently started my LLC, I assume you mean in 2020. And excuse me. And so as an LLC S Corp, that means you will file a separate tax return, which is an 1120S. Excuse me. That will, you'll report all your income and all of your deductions, and that'll flow through to your personal return. Because you haven't made any money, do you still need to file taxes? I assume that you had some expenses, because when you first start a business, there are always startup costs, right? And so you will want to file a return so that you can take all those expenses and deduct them on your business return so it can flow through to your personal. So you can take those, that business loss is what it's going to be, business loss against your other income for the year. The rule on both partnerships and S corps is you do have to file a return if you had any activity. So if you had any expenses, right, if you incurred any expenses or you had any income, you should be filing that tax return. That said, if you didn't have any income, the IRS isn't going to miss any, isn't going to be sad because they're not missing any taxes on that income because there is none. So I don't think you're going to, you may not get a nasty letter from the IRS saying they missed your return, but you do want to, if you want to follow the rules, you do want to file that. And like I said, if you spent money, you're going to have some deductions to take. So you want to take those expenses. All right. Oops, sorry. Popping it up, popping it down. All right. So let's see where I had oh, here we go. You put everything in a safe spot. You know where it is. Q&A day comes, and then you forget where the safe spot is. It's running really slow. Sorry, guys. So I've been getting a lot of questions on guidance that passed back in December, that it is what the Economic Aid Act, called a few other things. This act, you guys, passed a lot of stuff. So CARES Act back in March 2020, right? The CARES Act is what gave us the PPP. It gave us EIDL. It gave us our first stimulus payments. Okay. It gave us the original employee retention credit or employee retention tax credit. It gave us a bunch of stuff. Those are the things we've really kind of focused on and talked about. All right. Then in December, at the very end of December, they squeezed it in right before the end of the year, right? We got the Economic Aid Act. It's called a few other things, but the big act that was part of the whole entire normal annual spending bill, right? So I'm so sorry. There we go. That's just annoying. So in that act, there was a lot of stuff. All right. We got they reintroduced the PPP. So if you never got a PPP loan before, you could now get a first draw PPP under this new act. So that opened up January 11th. If you did get a first round PPP back under the CARES Act and you qualify for a second round, they created qualifications and a system to get a second round PPP. With that, you have to show a 25% decrease in revenue any quarter in 2020 compared to that same quarter in 2019. All right, so as long as you can show a 25% decrease in gross revenue or receipts, so all your money that comes in at any point in the year for a whole entire quarter, so first quarter, second quarter, third quarter, fourth entire year, if you're down the entire year by 25% or more, boom, you qualify for the second PPP. They also added that they say businesses with NAICS code 72, meaning you are a restaurant, you are, I think events centers, but it's a whole industry, right? You now can get more money under this PPP, under this law. So everybody under the CARES Act, the first round, second round, you get 2.5 months worth of payroll. All right, so what that means is if you have employees, you take all of their W-2 wages for the year, you divide it by 12 to get a monthly payroll, you multiply it by 2.5. All right, but restaurants or anyone with the NAICS code 72 gets 3.5 months worth. So that's a big deal. That's a big jump. I just did one for a client who was expecting about $230,000 and they got like 350-ish or something like that. So they were, that was really exciting. Pretty much everything else stays the same, you guys. It's a 24-week spending period. You have to spend at least 60% on payroll. That's still a thing. And also for the second round, you do have to have spent all of your first PPP money before you can get a second one. You do not have to have applied for forgiveness. You don't have to have been granted forgiveness yet, but you do have to have spent all the money before you can get a second PPP. Okay. Some other things under this Economic Aid Act from December is they gave out more stimulus, right? This time they gave out $600 per person. All right. So if you're a family of 4, you should have got $2,400. We will talk. If you're not watching us on YouTube or you're not following us on YouTube, definitely head on over there because we are in the middle of a video series all about these different changes and these little pieces from the Economic Aid Act that will help you. So the PPP, the stimulus check. What do you do if you didn't get your stimulus? We have a video on that. What do you do if you're overfunded on your PPP? How do you, like, a whole bunch of things. Right. One thing I do want to touch on that I kind of touched on last week, and I've kind of touched on it because I've been getting questions. But there is a thing called the Employee Retention Credit. All right. And the Employee Retention Credit is for those of you that have employees. All right. So if you don't have any employees, it can be yourself. If we think it can be yourself. If you're an S corp and the only employee you have is yourself, there's some grayness in this. Like we're trying to make sure you can include yourself. There's just a few other stipulations that are preventing other relatives from qualifying. So we're waiting to get a little bit more guidance on that. But if you're an employer and you have employees, the Employee Retention Credit could be something that could get you a substantial amount of money back. All right. And the reason we really didn't talk about it a lot is because it was created with the CARES Act back in March. But at that time, you could get the PPP or you could get the Employee Retention Credit. And the PPP was usually more beneficial. Well, with this new Economic Aid Act that passed in December, they said you can now go back retroactively and qualify for the credit and get the credit, the Employee Retention Credit, even if you got a PPP. The hard part, the part that gets tough and the part that just kind of makes a mess of it, is that you can't use the same funds, right? So let's start with, do you qualify for this Employee Retention Credit? So first of all, you have to have employees, okay? You cannot be you can't be a sole proprietor or a single member LLC. You have to have W-2 waged employees. There is, so W-2 employees, sorry, let me keep going. And you have to have, in 2020, you have to have had a quarter where you had a 50% decrease in receipts. All right, so this same calculation we're doing, right? So with PPP, if you want a second round, you have to have at least a quarter where your receipts are down 25%. For the Employee Retention Credit, in 2020, your receipts have to be down 50% for any quarter. All right, so that's what I want you guys to do. That's, as business owners, I want you to look at your financials and say, okay, was I down 50% in any quarter in 2020? Did I have employees? Check, check. And then you're gonna be like, okay, well, did all of my payroll for that quarter that my receipts were down 50%, was it all paid by PPP? Or did I have wages that exceeded my PPP loan amount? Okay. And you don't have to get exact, but this is just kind of a checklist. Like, if you're like, I think so, I think so, I think so, or yes, 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 then you're gonna wanna explore this Employee Retention Credit just a little bit more. And when it comes to actually getting the credit and actually calculating it and figuring out how much you qualify for and all that stuff, I definitely recommend getting an accountant to help you with this, someone who's familiar with the Employee Retention Credit. I will tell you, if you did not get a PPP loan and you're interested in this Employee Retention Credit, payroll company can help you with this. We can help you with this because it is run through your payroll. All right, when you're you go back and you amend your payroll reports for 2020. But the problem we're seeing from some of the payroll companies is if you got PPP, they're not doing that calculation for you. That's something you have to do. And that's where it kind of gets complicated. All right. So definitely somewhere where you're going to want to enlist some help in doing that. That employee retention credit, they then extended it to first and second quarters of 2021. Not only did they extend it, they also changed the rules because why not? So in 2020, you could get a max of $5,000 per employee. It maxed out. It was 50% of qualified wages with a max at $5,000. Okay, for that credit per employee for the whole entire year. In 2021, there are a few caveat or changes. So first of all, in 2021, you do not have to have a 50% decrease in revenue. You have to only show a 20%. So for this first quarter coming up, right? The first quarter is January 1st of 2021 to March 31st of 2021, okay? If you anticipate being 20% lower in gross receipts compared to first quarter of 2019, okay, you got to go 2 years back, all right? But if you anticipate having at least a 20% decrease in your revenue, in your gross revenue, then you can qualify for this, all right? So that's step one. Step two is making sure you have wages that you pay out of pocket that exceed your PPP if you have one, right? So that'd be like your second check, okay? So then I do have these wages. So then, and that's gonna be the crazy hard part. I made it sound so easy, right? I'm like, you just have to figure this out. No, it's complicated. But if you can figure it out, kudos to you. So then from there, okay, so you can get a credit of up to 70% of your employees' wages, up to $10,000 in wages. So here, guys, you can get up to a $7,000 credit per employee per quarter, all right? And it's for first and second quarters. Therefore, you can get up to $14,000 per employee with this employee retention credit, all right, in 2021. So it could be a substantial amount of money, right? If you have a number of employees and if they make, because remember, it is 50% of their wages. So in order to get the full $7,000 credit for the quarter, you do have to have paid them $14,000 for the quarter. Do that math, 14 divided by 3 months, so that's just under $5,000 per month. So I know a lot of us don't have employees that quite make that much. That's like 60 grand a year, but but anyway, so it can add up. And it's not all or nothing. It's like, it's not, you have to take the, $7,000. No, it's up to. So if you have an employee you paid $1,000 to, right, for the quarter, then you qualify for $700 for that employee. I hope that makes sense. It's a really good tool out there available to you guys. It's just a matter of implementing it and knowing how it works. And it is a little tough. But I feel like there was one other thing I wanted to say about that. $7,000 up to $7,000 per employee per quarter. So $14,000 for 2021. Can't remember. I feel like there was something else I wanted to say. Dang it. I'm sure I'll circle back around. So April's one of my bookkeepers. I love her. If you're ever looking for a bookkeeper, she's awesome. Anywho, April says, oh, good. I have a client that didn't PPP at all and still hasn't, but that might be easier to have Gusto handle without the PPPs. I mean, it could be, but it's also what's tough is are you leaving money on the table? Because if, and this sucks what I'm about to say, you guys, but it's like a game. It's like they have, they're like, here's your PPP money. Here's your ERTC. All right. And you got to say, okay, like I could get this much money for my PPP. Okay. I could get this much money for my ERTC. All right. But could I get more money if I work the two? Right. Because, there's nothing illegal with this, right? You just can't use the same wages to qualify for both. So why do I think, like, why am I saying this? Why am I like, this is so complicated? Okay, let's break it down. Let's say I have one employee. Let's say April works for me. April is my employee. Hey, April. And let's say she's a big one. Let's say she makes $10,000 a month. Okay. let's just go with this. All right, so she makes $10,000 a month. All right, so I could say, so that's $30,000 in the quarter, right? That's $30,000 in the quarter for first quarter, okay? But only 10,000 of that qualifies for this ERTC, right? So I've maxed out my ERTC. All right, so I think that's the route you guys are going to want to go with. Okay, if you're trying to balance both, if you already have your PPP, but you're like, wait, this ERTC, I qualify for it, sounds good. What I think you want to do is take the ERTC, all right, and max out as many employees as you can for the given quarter. Okay, and this is good, and I'm saying this, but every business is going to be a little different, okay? So, but in this case where I hired April, she made $30,000 in the quarter, well, only 10 qualifies, right, for the ERTC. So January, I pay her $10,000, I use it for the ERTC, my ERTC for first quarter is spent. I'm gonna get my $7,000, and that $10,000 that I used to qualify for that ERTC, I cannot spend PPP money on that now, right? But in February, I can. So in February, I can now say, this is where I'm spending my PPP money on payroll. All right. So it can be a timing difference. Keeping in mind, you guys, you have 6 months to spend your PPP money. So maybe that means you take the ERTC in first quarter and second, depending on when you get the money, right? That also depends, right? But if let's say you're just now getting your money in February, okay, so your 6 month period is going to be, February, March, April, May, June, July. Okay, if you do the math and you can spend all your PPP money in July after credit has expired, maybe that's what you do. So there's a timing balance, or there's a timing thing you can do to kind of balance the ERTC and the PPP. There's also how you're spending it, right? You only have to spend 60% of your PPP on payroll. Okay. If you're one of those clients that doesn't have any other expenses that qualify, sure. But most of us have other things, right? Now that they've opened up qualified expenses for PPP, you can basically spend it on any sort of operating expenses. So at that point, maybe you only spend the 60% on PPP, right? And then you spend the rest and you say, that's my ERTC. So do you guys kind of see how there's ways to juggle these and maximize your money? But it's going to take time on your part, or it's going to take hiring a professional. That said, even if your professional costs you a couple $1,000 to do this, and you're getting a $14,000 per employee credit, your return on investment is going to be there. All right. But the first step is to make sure you can qualify for this ERTC and make sure that you have enough expenses to do PPP and ERTC if that's your thing. Okay. One more question, you guys. My kid has an online class. I got to go get him on. So Facebook user, if a business didn't have payroll until October of last year, can we still apply for PPP? Yes, let me kind of work through this. Okay. So the first question, so the rule, the very first rule for PPP is you have to have been in business on February 15th of 2020. Okay. So if you were in business on February 15th of 2020, but maybe you just didn't have payroll. Okay. But you've satisfied the I existed, but it's basically, did your business exist pre-pandemic? Right. So if your business was in business on February 15th of 2020, you've checked that box. All right, now that we're opening PPP now, and at this point, they're going to use your 2020, they can use your 2020 payroll. The thing is, they're going to calculate it differently, okay? Or you're going to get a lot less, right? So you're saying you didn't have payroll until October of last year, which means you really only had 3 months of payroll, right? Or less, you had October, November, December. So really, if they took it and they would average it, right, to say your annual payroll, a year of payroll would be this amount divided by 2 or 12 times 2.5, they're not going to do that. Okay, and if anyone finds a bank that does do that, let me know. But how they're going to calculate it is they're going to take your total payroll for the year, which is only that 3 months, but they're going to take that, they're going to divide it by 12, and then they're going to multiply it the 3.5 months worth, depending on your industry. And that's the loan amount you're going to get. Okay, so I like numbers. Let's put this in numbers. So let's say in that 3 months, you pay out $20,000 in payroll, right? Let's say 30,000 because I like these numbers. So in 3 months, you paid out $30,000 in payroll. You know, you and I are like, well, that's that averages to $120,000 for the year. So that's what it should be based off of, right? No, because they're not looking at the fact that you only paid 3 months of payroll. They're looking at that was your total payroll cost for the year. They're going to take that $30,000. They're going to divide it by 12. I'm going to use my calculator. They're going to multiply it by 2.5. Can I tell you a funny story? Like I can add numbers pretty fast, but like doing complicated math, I use my calculator. And I don't know if there's any other accountants or bookkeepers in here, but like, do people judge you thinking that because you're an accountant, you're really good at like math? I'm like, calculator. Like that's what I use a calculator for. So $30,000 divided by 12 times 2.5. So you'd get a $6,250 loan. So not nearly what it would be if they would average it. I don't think it might be worth it to talk to your bank, but I just don't think there's anything in the rules that provide that caveat for I only paid 3 months worth of payroll. That's what but this is what it would have been for a year. Hope that makes sense. Excuse me. So, April, I would love to, and I just, so probably after tax season, if people are still looking into this and depending on how long they extend all of the due dates and everything, which right now I don't know. I haven't really looked at the filing deadlines. But we can't right now in the middle of tax season. We've reshuffled some staffing and it's not in the cards right now. We've got too much on our plate, but I would love to because, Jamie, we have another friend, Jamie Troll, was looking for the same thing. She's like, I have so many clients who could use this support. And I think that's where it's going to be hard because you have to find an accountant who's not doing taxes right now. Because I don't know, unless there's a big enough firm that they can take someone out of tax prep. I just don't know if any smaller firm or any firms, unless they can hire someone just for ERTC and PPP credits. And we're just not there. We're just too small. So, but I would love to. So we'll see after April 15th what everything looks like. So, all right, you guys. Well, it is 10 o'clock. I said I was getting off early and I didn't. So I'm going to jump off here now. I'm going to run and get my kid and get him on his class. I will see you guys next week. If you guys do have questions, please head on over to our Money, Tax, and Finance for Small Business. I know a lot of you guys tend to ask questions on YouTube and I just can't monitor everything. So if you go on over to our Money, Tax, and Finance group and ask questions, that's where we compile them for these weekly Q&As in case you ever can't make a live one. All right. So I will see you guys next week. Same time, same place. You guys have a wonderful, wonderful week. Bye, guys.